Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although this could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform today, and none of this should be construed as trade or investment advice. Past performance not indicative of future results.
Good morning, good afternoon, and welcome to Develop Your Edge with Anthony Crudele. I'll be your co-host, Tom Schneider, CMT, with NinjaTrader, and we have a great topic today, following on the heels of last week's trading the stock index futures live. We're going to trade the energy markets live, but want to introduce, as usual, every week we do this Thursday mornings, 10:30. Special guest, Anthony Crudele. How you doing, Anthony?
I'm doing great, Tom. Hope everybody's doing well out there. I'm excited for today's show, talking about trading micro energy. I think that the micro energy is probably one of my favorite ads that CME Group put in for contracts, because I think that there's so many traders out there that wanted to step into the crude oil or the natural gas realm. And it was a little intimidating because those markets, let's face it, they move quite a bit. And really a majority of the people that are trading those are going to be professionals. And so the micro energies give you an opportunity to step in and, be able to compete in that marketplace.
Yeah, I think it's great with the addition of the micros, kind of following on the heels of what they've done in the stock index futures. They've made it more, accessible, if you will, for retail or new traders that want to do something different from the stock index futures. And when you said that you were going to do energy last week, you said that. I just think it's a great, next step from what you did last week, and excited to see how you're going to apply your tools and your thought processes to this market. We're doing it live. This is great.
Yeah, and I want to start off with just that micro talk a little bit as well. We talked about that last week, and I got a lot of comments about how I was resonating with some of the traders on the over trading of micros. Because micros are less expensive to trade, there is a tendency to overtrade them. And that is no different from the E-mini S&P, micro E-mini S&P, I should say, to the micro crude oil or micro natural gas, which will soon be out. That's not quite yet live, but there will be a micro natural gas in the coming months. So look for that. But that is the tendency. And what I want to do again is really just take some of the simple tools that I've put forth on Develop Your Edge and show people a simple strategy to come in and step in and look at the crude oil market and how we can trade it. And today we're going to focus on the micro crude oil. It's $1 a tick. So you have your regular crude oil, which is going to be $10 a tick. And so now you're going to have $1 a tick. And once again, it's seems inexpensive because you're like, oh, it's only $1, and people just click it in and doing a lot of clicking when it comes to micros. And that's always good for the exchanges, and it's not necessarily always good for the trader. And so what I want to really showcase today is find the side that you want to trade in this market through technicals, because this is a market where fundamentals truly are in the marketplace, unlike maybe what we see in S&P and NASDAQ and some other markets. Fundamentals here are the leader. Macro is the leader. Spreads are where a majority of the major players are playing. Not a ton of them are playing the front month contract. And so you have to understand that. That's why the front month contract, it can be a little bit more technical. But what's interesting about a micro versus also a big crude oil, the micro is financially settled. So you don't have to worry about that going into like, oh, I bought a crude oil and, all of a sudden now potentially do I own how many barrels of crude oil? That is not the case with the micro. It's a financially settled market. And also understand when you're trading energy markets, they have monthly expirations, unlike quarterly expirations for equities. And so there is some things that you have to do your homework on beforehand. But today, what I want to showcase is, and this is the way that I trade crude oil. I've been trading crude oil for 20 years. I don't trade it all the time. I trade it only situational. Like right now, I actually have been trading a little bit of crude oil, not actually over the last week, since the unfortunate news that we've seen with Israel and Gaza. That I have not been trading since then until today, but I have been overall trading it. And I want to show you something today, which I think is really interesting, because the first thing that people are going to think about is, okay, there's war, oil should go up. Oil has not gone up since then. And that's why, I always say macro is the leader, but you also have to have technicals to prove to you that you could do something, because I don't care what your thought process is in any market. If you want to be a macro trader, very difficult to hold futures through some of these moves. So we're going to go to the charts here to start. And what I want to start off with is, when I look at the 60-minute chart, I don't even need to go to a daily. I'm going to go right to the 60-minute because, and this is really that same framework I've put in place for the other markets that we're trading, that I've been trading, on a regular basis. And I start off with the VWAPs. Once again, when you have a VWAP, what you want to look for is, I look at the regular trading hours. So now what's going to be different about this, and I'm going to change this here because I want to show you live. Normally I have it on the CME US index trading, regular trading hours. We're going to move that to the NYMEX regular trading hours. Click apply and click OK. And so that's going to use the order flow VWAPs and make them more in tune with the NYMEX energy regular trading hours. I already have my lines marked off, but and what I'm doing is I'm showing you where the VWAPs are during the regular trading hour session. Now, I know that crude oil is a global market. It's trading overnight. I still have noticed that the volume is heavily favored during regular trading hours. I really don't trade crude oil overnight either. And so once again, if I want to get a good metric on what's happening, because this is crude oil priced in US dollars, you also have to understand that there is the Brent crude market, which you're going to see a lot of the people overseas trade. The crude oil market is priced, it's the WTI is priced in US dollars. And so a lot of that volume is going to come during US hour sessions. And so it's just important to look at that. And when we look at these VWAPs, what I like from them, and I've talked about this with the US equities, I like to see them from session to session. Now, why? Now, I like that because when I'm looking at where the majority of the volume is, can price sustain above a volume weighted average price? It's really just that simple. From one session to the next, what's happening? Are we building on price or are we not? Right? Are we building on a rally or are we not? And volume weighted average prices are really a good way to gauge how the price action and the volume together combined, because we have volume weighted average price indicator, it helps us understand how the market's reacting to, let's go back to that macro. So the macro is obviously, initially everyone thinks bullish. The first thing I thought about, and I actually talked about this in my Discord, was crude oil is just not a buy yet for me. And the reason is not because of the news. The news might indicate that, oh, there's some fear. We got some worries about Iran. Who knows what could happen? You also have people like Schneider who will talk about the SPR, how it continues to be drained. You have all these macro things that will point to a higher price in crude oil, potentially. But it's got to be proven, and you got to find a way to manage risk. So we start off with that 60-minute regular trading hours, and we look at the VWAPs and we say, what are we doing? Are we building on rallies in the session? Are we not? Are we building actually on the breaks in the session? So Tom, maybe I bring you back and we talk a little bit about what I'm looking at here. This is the initial perspective.
Yeah, and what I see right here, we're between 2 days worth of VWAP, right? We're between yesterday's VWAP, and 2 days ago on the upside VWAP. So the question to me is, we're trading almost right in the middle. Well, we're a little bit closer to the downside. It would seem to me, if we break yesterday's VWAP, that's a pretty bearish move.
Agreed. And look at today so far, they've been building on top of it. And the VWAP right now is pretty flat from the open. We're only a couple hours in. But when you look at it, you were in between this area. And this is where a day like today gets interesting. So I look at it and say, okay, I have this boxed out area up top where VWAP's in the session where we're putting in some heavy volume and price try to sustain. You saw the sell-off come in, probably squeezed out a lot of longs. If you looked at yesterday's session, the market really had quite the steep sell-off towards the end of the day. You see these two big bars here where the market just really just hammered it lower. Today, you get up, you build above the prior day VWAP. Now you're kind of squeezing out the people that were either short, or the people that have been short or been long that got out are now looking to potentially build back in, right? Because it goes back to, and I think about this with energy more than any market that I trade, is because the macro backdrop is so important that you understand that price of the downside probably only has so far to go. And then once the buyers come in, what I've noticed with crude oil, it's very similar to even like a gold market. It might do nothing for a period of time. And then when it starts to build on a rally, if the macro supports it, which I think it does right now, it just builds and builds and builds and builds and builds. It become very one-way type markets. And so anytime that I see a market that is not responding the way that we would think it should in the macro, you have to really wait till those moments to where you say, okay, now price is starting to build higher. And what we'll do is we're going to go back, and this is where I really get into the nitty gritty with it. And this to me is really where I set my strategy up for every market that I trade. I like VWAPs and I like standard deviation bands. Now, the reason why I like them, and I want to talk about this a little bit today, which I haven't much in the past, is when you get VWAPs that when we're above the prior day VWAPs and we're now building above it, watch the standard deviation lines and watch to see how they react on a day like today. And it helps me determine the market conditions. So right now, what I see is this. You see a VWAP for today that's pretty much in that opening range. Not pretty much, it is. This is this area. Let's talk about these horizontal lines. We're boxed in from the opening 3-minute range. I've talked about that ding of that bell, the first 3 minutes. Let's see what the market's doing there. Anchor a VWAP to it. And there we are. As you can see, NYMEX energy regular trading hours, right? We're trying to build right now above it, but VWAP isn't going. So price is above it, but it's not. Look at where the standard deviation lines are. What you notice is they are pretty much all sideways. And what that means is, to me, is that two-way tape. Means that rallies are going to be sold and dips are going to be bought. And it just is going to be one of those things where you think the market's going to keep exploding higher, it comes right back in. When you think the market's going to fall all the way back to the prior day VWAP, it stops and turns right back in. And so in your mind, you look at this and you say to yourself, okay, we saw what was happening on the daily or the 60-minute. We're trying to get back up to that important area where that volume was built prior to or following the news. And now the market's trying to, even on a day like today, sustain above a VWAP and sustain above opening range. But those standard deviation lines are pretty flat. And anytime I see a standard deviation lines that are flat, that's my smallest positions. Because think about it this way. A lot of people want to look to see if we're trending in a day. Are we starting to see that move that has the potential to really grow, right? Where the move can be substantial to the upside. VWAPs and standard deviation lines are going to be pitched in that direction, because if the price is going to be moving, or it is currently moving with that level of intensity, you need to see that as confirmation. Today, we just don't see it yet. So here's my approach. When we look at it from today's trade, what do we want to do? What I really like to see on days like today are 2 or 3 standard deviation moves where we get to the 2 or the 3 to the bottom or the top. And that's where you step in and buy. So if you look up top here, 85.21 is a 2 standard deviation from VWAP. And you look at that and you say to yourself, probably not a bad idea for a little bit of a scalp. Probably rotation back down, right? And what I really would like to see is a move back down to the 2 standard deviation, even though the market overall has been down the last few days. I want to buy this in here more than anything, because today's low is above yesterday's VWAP. So today versus what we've seen the prior couple of sessions is a VWAP higher versus the other 2 days, 3 days, we've been lower. So the look is buy the 2 standard deviation or the 3 on any sort of pullback. That's where I get aggressive. You could buy the 1 small, but the 2 and 3 are aggressive.
And so Anthony, that's a great point. this could be what we call a range trading day, right? Using VWAP bands as your extremes, like you said, the 2 or the 3. Question is, though, for me, you've got a much wider trading range yesterday and the day before. This day is kind of smaller, so those ranges are tighter, right? Are you worried that maybe you get outside the 2 or the 3 pretty easily because of that tight trading range? Could that, is that something you're prepared for?
Well, I hope it happens in the opposite direction of the direction, that I'm buying in, right? And so if I try to buy the 2 standard, I've hoped that it will rotate all the way up and it starts to expand. But at this current point, because what's happening here, this is market digestion, right? The market is sitting here going, okay, we're above, like, do we really want to build on a rally here? I mean, this is where I go back to the over trading scenarios. For me, it's very simple. What I want to do is, if the day is going to start building off of the prior day, you've got to wait for the pullbacks to the second or third standard deviation. And the reason why I say the second or third, not the 1, is simply because right now the trend is down. If I want to be long, why do I want to buy a rally? I don't. I want to buy the break. I want to buy the squeeze, because right now the market is trying to turn back up, but it's not quite done it yet. If these VWAPs were pointing up and the VWAP was above the opening range and the standard deviation lines were up, I'd be buying at VWAP and 1 standard deviation above it, looking for us to accelerate higher, right? And I said this before, like with crude oil, it's one of those things where I think you even have to be pickier with this market than S&P. S&P and NASDAQ, maybe not NASDAQ, it's a whole other story. But the S&P, the market tends to absorb price and volume a lot more. So when you get to areas, you could step in and you might see rotations. With crude oil, they will rip your heart out, man. It's like you have to really, really be smart about it, because this is a market where you could easily just get super chopped up, because it could be a one-way train. When a macro backdrop or a macro economic is the leader, is the main reason why a market moves, you have to realize that orders might come in randomly and in heavy amounts. They might look at it and be like, we want to be out now. Something's changed. It's less of a technical situation. And I also mentioned that spreaders and options are where the pros are. And so you don't know where this market comes in, where all of a sudden, if you're not seeing what's happening in the back months, right? And you don't see what's happening in the options market. And so you have to be very picky as a front month energy trader, very picky. And so what I look for is I try to build that plan. Today, my plan is, we're above it. Overall, the trend is it's obviously been a little bit down over the last several sessions. Macro backdrop is still bullish. As long as we hold the prior day's VWAP, I want to come in and buy some weakness. So what I look at right now is that, because let's just look at this from an example of a 3 lot, right? Because I want to go back. I want to try and see, hopefully I can get some trades here. So 84.59 is 1 standard deviation. What I look at is, if I like the 2 standard deviation as a bigger trade, I've talked about this a lot, big, small, or not at all. I would be in, let's just say that if I'm normally doing 3 contracts, I would try to get to 5 or 6 on a 2 or 3 standard deviation move. With the 1 standard deviation move, I'm going to do a 3 lot. And I'm going to do a 3 lot because the trend is really kind of choppy. It's not truly defined for the day. It's a 2-way tape, as we mentioned. My initial buy is going to be right at, or at most, 1 tick above. I won't pay up more than what the standard deviation is. And the reason is because this market is already proving to us there's slippage around standard deviations. It's not like it's just going there, stopping, pinning, and turning around. So you have to think about it and say, okay, I want to see a little bit of a squeeze, potentially down to a standard deviation. I'm going to take you to one other thing before I bring you back in here, Tom, because I'm going to start working the bids. When I look at this, look at the cumulative delta. Cumulative delta supports my buying mindset today. So I'm actually going to work that bid in here. So I'm going to work 1. I'm going to work 1 at 60, and maybe we get hit. So what I'm looking at is, let's see if we get a little bit of sellers that step into a 1 standard deviation. Watch how it reacts. I'm not going to work the other 2 yet, because I don't want to get splashed out right away. Now, my stop is going to be 50% to the next standard deviation. So it's actually pretty tight. And so really, I'm going to know almost right away if I'm going to stay in this trade or not. So you've got 84.59. I'm working 84.60s. 84.38 is the next standard deviation. That's where I'd want to be aggressive. So I don't want to be too aggressive in front of it and buy a bunch at 84.59 and it goes to 38. So I'll work one. And then my stop, I'm going to look at it and say, so it's 21 ticks wide, right? So I'm going to say, I'm going to give it 10 ticks. So I'm going to work a stop at 49. Okay. So now I am working one for 11 ticks of risk. This is my range of execution, 60 to 49. What do I mean by that? Meaning that I'll buy if it were to come down in this area just above my stop, because if it doesn't hit 49, I'm going to burn out of it. I'm going to wait to hit 38, 39 area. And that's where I'm going to step in a little bit more aggressively, more at that price. Okay. Because trend is choppy or sideways, I don't add in all at initial entry. I work my initial entry and now I can see my range of execution. Because in my mind, I'm looking at it going, buddy, you could maybe buy some 55s or 53s if they get down there, because now you've only got 4 ticks of risk, right? And that's relatively cheap. I have no problem losing 4 or 5 ticks if it comes back down in here, but I'm not going to lose 10 or 11 ticks to then ultimately buy 38, 39, right? Because it's about risk management, right? This is about execution. I am going to let the market come to me in my area, and I'll trade closer to my price in choppy conditions versus further from my price in choppy conditions.
So, Anthony, you've got your trade set up here. You've got your entry and the stop for that entry placed. At what time do you abandon this trade, right? So let's say the market turns around. Are you looking for something where the VWAP crosses above your 3-minute opening range high level when it kind of changes? Or are you keeping those in and just hoping for a bit, a deeper retracement?
Well, at this point, the way that the strategy is set up, not a lot would change between standard deviation lines for me to get out. One thing that would force me to get out of the position would be like, okay, the market's starting to go higher and it can't build on cumulative delta, or it can't get above the VWAP. When I look at targets, so let's just say I only get one on, I'm going to get 2 on no matter what to show how I'd scale it. So look, we're actually getting pretty close here and we're at the bottom of opening range. I'd love to see just a little squeeze into this area. Okay. So when it gets down to 60, I'll actually put one other one in at 56 just to have it. Of course, let's see if I get one ticked. Where it goes down there and takes it and doesn't fill me. But the point is like, I'm going to get to two contracts to hopefully show where I would scale out. Nothing is going to tell me really in the market reactions that this trade is good or bad, because the market is already a two-way tape. And so you don't want to overanalyze it. If the trend is up on the day and the standard deviations are up, okay, and then I start to look at delta. I'll look at RSI overbought. Like right now, this is just a two-way. This is a sloppy tape. Yeah. And you have to be so disciplined to say, I am not going to pay up more. If anything, I'll pay less than what I think my entry should be, because the slippage is great, period. The slippage is great. And anytime I know that we're in a two-way tape, I'm trading closer to stops versus further from stops. Some people would be like, well, it's going to rally. I think it's going to go up here. I think this is a good price deli. And I want to buy 62s or 63s, and then it rips down to 49 and it goes 60 bid. And you're like, oh my God, do I buy them again? See, for me, I could be wrong a couple of times here, catch one winner and make it back. Anytime there's a choppy tape, I'm going to say this again, you trade closer to your stop, not further from your stop, because the market's indicating that there's slippage. Why would I want to give the market more? The market's only going to take more. So you have to understand that. I mean, it's amazing how you can work the bid in a live session. They just
maybe they're laughable. Watching, Anthony. Maybe they're watching.
They're going, yeah, at least 60 bid. Yeah, right. It's the one micro. They won't give it to me, but it goes back to looking too. There's a couple things here we'll talk about it, because I think I'm going to get hit on. The VWAPs are still relatively flat. They are just it's one of those things where it's no problem to go to 39 or 18. That's where I'd really want to buy. And so in a perfect world right now, we'll get hit on the 60s. Maybe I get down to 56. I work my stop. It is what it is. We'll see what happens. And then I'll start talking about hopefully the action. There it is. I'm filled now. So I'm long 1 from 60, right? And so when I look at what's changing, and Delta is actually going up. So there's actually volume buying this dip. Oh, it actually came down a little bit. You actually saw quite a bit. You actually saw somebody sell quite a bit of crude oil here. Now, here's the one thing I will mention too. Even though we're trading micro crude oil, if you're looking at anything with indicators, I would use the CL contract over the MCL. Just my 2 cents, especially when it comes to volume. I want to see the volume in CL, not MCL. So now, I'm just going to buy another one just because I want to be in, and I want to do this for an example's sake. And I'll actually move this one down to 54. And I'll move my stop to total is a 49. So now I'm long 2. It says 60, but it should be a little better than that. Doesn't matter. So when we look at it, I'm going to say, okay, everything's still flat. Everything's still flat. That you saw some selling come into 1 standard deviation. Remember, I don't love 1 standard deviation because sideways tape, flat deviation bands. A rip up to my equal risk versus reward, which would be, at this point, I'm risking 11 ticks, maybe, and I'm risking 5 more here. So maybe I'm risking a total of, an average of 9 or 10 ticks on a 3 lot. The point is that if it rips up to 71, 72-ish, and I get more than my risk reward just in front of that VWAP, I probably peel one off and just go, okay, trading around a core position. Maybe it comes back down to 60 again, right? And so I look at it and go, okay, I've got 11 ticks of risk. I'll put one up at 71. And because I've got 2 on. And the reason why I do that is because, once again, if I felt the tape was really strong, I wouldn't be working anything there. All I'm trying to do is reduce my risk in the marketplace. This thing can trade 75, 45, 25 times before it eventually goes higher. Why would I? This is part of when you see a 2-way tape. You want to get risk off. You want to trade close to your stop, and you want to burn out of half that position, and then you sit small. Because if I take 11 ticks of profit at 71 versus the 60s that I bought, now my other one, I've only got 11 ticks of risk, essentially break even, right? Of course, I can get filled worse on the stop, but for the most part, I've got very little to no risk on it. And so that's what you do when you have a 2-way tape. I'm actually glad we're able to see this, because this to me is really a perfect example of when I look at it and go, whether it's the S&P, crude oil, doesn't matter. I think it's a 2-way tape. The market's battling, small to start, add a little bit closer to my stop, try to turn out of a little bit of my position, keep my stop working. If it blips down and gets me out at 49, so be it. I watch to see the reaction at 38. If that starts to hold there and firms up, I step in with even more than my 3 lot, because at that point, now I have an area where I could even use a smaller stop, because the market might, if it holds there, it could be a really good hold. And so I can potentially trade more contracts without having a wide stop. And so, this is part of what it, is being a trader, right? Is putting together a plan. And then when you look at it on the shorter term, becoming a better executor of it, never forcing any issues, allowing the market to be what it is and execute accordingly.
Awesome. A lot to unpack there, but I think said very well, and, shown really well on the trade ladder there, that you're using the Trade-O-Bait ladder along with the NinjaTrader platform. So really appreciate that. And hopefully we'll see this market get up to your target. That would be great.
Yeah. I mean, once again, like I said, this is what I anticipated on a day like today, because like we've talked about, and you could see, how choppy. Well, actually, you're going to get data here in a second. You're going to have data coming out. And so, obviously don't want to deal with that, but as we're closed for the day, I just hit exit market and cancel all. And so we don't want to be trading into data. I would have gotten filled on it, but nonetheless, you could see how thin the book got, and that's what happens at 11 o'clock. So hopefully you guys can take something from this session, but that's the way I look at trading micro crude oil.
Awesome. Thanks, Anthony. Real strong. Not normally on a Thursday do we have an 11 o'clock number. That's normally on Wednesday at 10:30, but the same principle applies. Very, very careful trading right around the EIA petroleum report. It it seems to me, I don't think I have seen a day where when it's dropped, there isn't at least a little volatility, maybe not direction, but certainly volatility.
Just enough to get my stop.
Right. Exactly. Exactly.
So,
we do have a question. Go ahead.
Okay. No, I'm saying, yeah. And so that's why the one of my favorite tools is exit at market and cancel everything. I know I'm flat and get me out, man.
That's it. That's it. We do have a question. You can send your questions on Twitter, or formerly known as Twitter, X. You can send them. You just put out a tweet. Just make sure you have the hashtag AskDYE for Develop Your Edge, and put in tag us at NinjaTrader, and drop your question for Anthony. This week's question from regular viewer and commenter Anissa says, would you recommend trading the spreads in energy markets, and what proxy market would be the best for energy markets? Thank you.
No, it's a great question, and it's an extremely important question. Anytime you're trading any sort of commodity, you want to be watching the dollar. You know, crude oil also focuses a lot of what happens with the Canadian dollar. So those markets are important to watch. And when it comes to trading the spreads, like I mentioned from the beginning, the spreads are where the pros are trading, the spreads and the options market. And that's where the biggest players are, because they're not coming in and just trading the front month. The front month is something that they're looking at very, that's not something that they're super focused on. And so spreads, that's a whole nother animal. I would look at it and say this: if you have the time to start putting in and doing the homework and how those spreads trade, I personally do not trade them. But I do think that is probably a really good path if you want to trade energy markets.
Awesome. Thanks for that, Anthony. I know we have a little bit more bit of business before we say goodbye.
Yeah, I mean, everybody, we got the Epic Equity Futures Trading Challenge coming up at CME Group. It starts Sunday, October 22nd. I'm going to be in there providing daily videos for all of the traders. Hopefully you could join us. You can go to my website and look at today's post, or in the YouTube description down below for a link that will take you to this page to sign up. It's going to be a lot of fun. CME is giving away money. Always nice to get some money back from the exchange, right? First place, 2,500, second place, 1,500, third place, 850. I expect thousands of people to be in here. And so it's going to be a lot of fun. And I'm going to put some little tidbits every day in the morning video about trading equity futures. So hopefully you'll join us.
Yeah, and I'll be joining you. I've got all the emails coming in reminding me to join. So I've participated in the gold and the bonds. It's a lot of fun. So hopefully you guys can too. All you viewers, it's going to be a great thing to do, and it's longer, right? It's longer than the gold. The gold was like 3 days. I think this is more like 5 or 6 days, right?
Yeah, this is the whole week.
Yeah. Looking forward to it. So thank you, Anthony. As usual, it's always a pleasure to hear what you have to say about trading. That's why we do this show. And thanks. Good to see you.
Great to see you, and hopefully everybody took something from trading the micro crude oil today. Have a great day, everybody.
And with that, we'll end the show. Want to remind everybody, we'll finish up the day with Mike Burke at Bars Closing. In the meantime, have a great trading day.